Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to dive into Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to financial topics, wealth building, and or finance. Let's dive in. Let's take a look and see what is going on. You can follow me at Finding_Finance, or you can join our community, finding-value.com, where I dive deeper into these topics. Individual companies, individual sectors, looking at my portfolio. If you'd like, you can see my buy and sell purchases and sells on the website. They keep that all track of it. I don't tell you the exact amounts because I think that's a little bit private, but I tell you when I'm buying, what I would be buying, why I'm buying it, and the technical chart setups. We do have a discount coupon code that you can put in May Day for further savings. So Fabi says it goes like this. AI data centers get money. Utilities expand nuclear capacity, and then uranium demand goes up. It is that simple. I responded with, I think it's more like this. AI data centers get money. Utilities need power now. An increase in natural gas demand surges. Hailstorm hits America, huge solar power gets taken out, natural gas demand increases. Hot weather hits, surge in electricity demand, surge in natural gas. Cold weather hits the world, heating demand surges, natural gas demand surges. Um, I think with where natural gas is located in terms of pricing, it is very favorable for natural gas and potential increase of demand as natural gas will basically substitute coal, at least in America and certain other countries over time. So I think that we're going to get a super spike in natural gas at some point. And with where we are at today and the pricing of where we're at today, natural gas is the cheapest, in my opinion, commodity in the world. It's cheaper than silver. It is cheaper than platinum if you look at the ratios. So we're just basically natural gas. The demand isn't controlled by electricity or the growth of electricity. It is highly subject to weather. And it's like subject to weather times 4. Bad weather impacting wind, bad weather impacting solar, bad weather destroying solar, hurricane season, which takes off supply, hot, which increases electricity demand, which is the swing producer is natural gas, and or cold weather, which also increases the demand for heating of natural gas. So there are a lot of variables here, and they are all subject to weather, whether it be the demand for natural gas directly or the it impacts the supply of electricity through renewables. Very At some point we're going to get this alignment that could, I mean, you could get, and I'm just going to make this up. What if we get a really hot summer? We get a bunch of hail that destroys solar panels. We get a bunch of hurricanes, and we have cold winter. I don't even know where the price of natural gas would even be close to be if a scenario like that happened. Now, I'm not betting on that. I'm just betting that I'm buying it at a cheap price and I'm going to sit in it, collect my dividends, and wait for something to occur. We already have a bunch of takeaway capacity coming in liquefied natural gas, but all of those other things could be a bunch of cherries on top of it. The Great Martini says, few understand this. Pay attention, study, don't read. So this is stagflation here, and the checks are basically what we've got in place, and we don't have one of those in place. So we've got high inflation, we have low economic activities, We've got poor government policies. We've got low GDP, gross domestic product. And do we have high unemployment rate increasing? Question mark. Now, some of these, I think that the inflation is so high that it impacts the GDP numbers because now they can basically fiddle around with the inflation rate, state a lower inflation rate, which will boost GDP if they actually printed the money. And this is all money printing. So high inflation is really money printing. Low GDP, but GDP has a money printing factor in it. And low economic activities, we measure that really through GDP, but low economic activities, you could measure it also by manufacturing index and stuff like that. So I think this is all check for the most part. And unemployment will come. I think it will. And I think we very well could be in a slowdown already. I've got other data down below that links to this. So this is that other data here, this low economic activities. It says leading indicator of ISM has rolled over. So the leading indicator of ISM has rolled over. ISM manufacturing PMI versus ISM new orders divided by inventories pushed forward 3 months. And you can see that we are diving down potentially, well, we are diving down in the ISM new orders inventories, which is the leading indicator of ISM manufacturing PMI. So we're diving down on that. And that's your low economic activity and what this is relating to above. Could we get a recession? Could we get a slowdown? I think we're already in it. I mean, look around, look at things for sale, look at some certain things. And there's other items and areas that I see that are still strong. But there's some things that I don't buy, guys. Like, for instance, there's a lot of cars for sale, and that doesn't occur in a really strong market. You usually get pricing pressure in a highly inflationary environment in cars. And what we're seeing this weird, well, I could say it like this. We are seeing things that people don't 100% need being sold off, and things that are needed, food and all these other things, are going up like massive. I just went to Walmart and I had to pick up well, I didn't have to, but I did pick up more like laundry detergent, more of just things that I kind of stockpile because I keep a good working inventory, so to speak. I purchased a bunch of it when the prices were really low because I knew inflation was coming. So I kind of went at it and bought a bunch of stuff. But now I'm kind of restocking a little bit. And prices, I'm like, oh my God, they went way up. We're talking, anywhere between 20 and 100% increase in almost everything that I see. I didn't realize toilet paper was so expensive now. I guess I loaded up at the right time. Oil. So this is Baker Hughes rig count. Oil is down 7, gas is down 3, and miscellaneous is up 2. So we are down on rigs this past. I think that's week. So Mac 10 says imploding jobs market is great for stocks. Whatever story you want, the end result is the same. And what he's got is a big move up, a sell off. We've been moving on up, and that does look like a bull trap. Could we get a move lower here? I hate to say it, but I'm coming around to this move actually going down and materializing. Obviously, you guys have seen me do the daily updates. I talk about NVIDIA and SMCI and how it looks really ugly and it looks like it's rolling over. The S&P, the NASDAQ also look like it's rolling over. A lot of people who try to time these tops generally get it wrong. So I'm just saying it looks like that. Let's see if we get some follow through here. I'm opening to it. I'm opening my mind to that view that we are probably going to see a slowdown. We have got an inverted yield curve. It hasn't quite uninverted yet, but we are seeing stresses with leading indicators turning, with The chart's looking like they want to go lower. This definitely looks like it wants to go lower for sure. And then we've got gold and silver that have broken to the upside, starting to run. And that also occurs when they stop raising rates. And eventually, when they lower rates, the yield curve uninverts, and that's when it takes off. So I'm keeping my eyes open for this potential pullback. Will this pullback impact our commodities? I know you guys are probably asking that question, and my answer is yeah, it probably will. We're also seeing oil be pretty weak. So I'm just trying to look at the data and say, okay, and that might impact where my new money kind of goes into, and well, we can talk about that over the weekend meeting. Zinc producers full year 2023 results by production, including revenue. So this is zinc producers. Glencore, the number one zinc producer. Vedanta, Hindustan Zinc, Tech. We got Tech here, and then all these other ones. BHP, that's pretty well known. Fresnillo. We've got Sibanye Stillwater, Hecla Mining down at the bottom there. So Glencore is the big zinc producer, if you guys want to know who produces a bunch of zinc. Here is gold, the cup latest. Watch the quarterly 5 MA line for support. We've got the cup and handle there, and it's breaking to the upside. The way that he has this drawn here, that's the way that I view of what gold's going to do going forward. Like when I make my decisions and when I look at potentially purchasing gold and silver mining companies or physical metals, this is what I envision. It's almost exactly like he has it. It's like we're going way higher. And that's kind of how I view it. Now, some of these, if you want to see kind of towards the top here, $12,000 an ounce, 9,000 are up at the top there, if you wanted to know what those are up there. Nat gas directed rigs fell 3 to 102. New cycle low down 15% year to date. Obviously, the low prices are having an impact on U.S. natural gas directed rig count. You can see how much it is down over the past year or so. Investment wisdom, Warren Buffett says, in the end, what counts is buying a good business at a decent price and then forgetting about it for a long, long, long time. Some people can do it and some people can't. And that's kind of how I view a lot of my investments for this commodity bull market that we are in and what I think is coming. I bought at the bottom or close to it in 2020 and 2021, and I'm continuing to add in certain sectors that are down. And I view it like we're in this big commodity bull market that is coming. And then what I do is I hold. I hold for a long, long, long time. And for some people, it is difficult. I've been holding since 2020 in a lot of my positions. I've been up, I've been down. Some people will say, oh, well, how come you don't trade it? Good luck with that. Good luck with trading your positions. I don't know many people who are successful trading in and out and capturing small market movements. I'm capturing the big market move. I've had a big move in a lot of the stocks already. I think that I'm getting a lot of very opportune entry points. And then you got to be really patient for this to play out. The further into the future that you wait, the higher probability of success that my investments have basically played out. So the things that I purchased in 2020 have played out very well across many spaces, oil and gas, energy service, uranium. I'm in some of the physical metals and gold and silver mining companies. I think are a really good time to be looking at right now. And they don't all go up at once. It's like they pass the baton between the sectors as they go up. They stair step higher. Some have pullbacks, and some go up while another sector is pulling back. And I'm trying to balance the portfolio where I get a nice, smooth upward move, where I've got 5, 6, 7 different sectors or more. I buy what I think are the best companies in each of those sectors. And a lot of these companies have 5+% dividend yields, all the way up to could be 30% dividend yields. So even when you're waiting and something's consolidating, you're still collecting a decent sized dividend. Then you get that big kind of stair step move up. We call it impulse moves higher, and then it consolidates again. Here's another one that's just starting to get heated up, in my opinion. So, emerging markets looking for their highest weekly close since May of 2022. And we're ready to break out here for emerging markets. And I've got a lot of ideas around companies that I think will do very well in what I think is coming. And some of those companies pay greater than 10% dividend yields. In fact, all of them do. Some of them pay about, well, some of them pay about 25% dividend yield. Sahara, another Sahara one. This is silver. Stepping back at a bigger picture, we have held the pop of the handle. It should be the top of the handle. And as long as it holds the monthly 150-day moving average, we are good to go. So this is popping higher here for the silver chart. And again, this is how I view the silver chart. He's got a $666 price projection at the top here. 300 is here, 138 is down here. And this is the big cup and handle that everyone is jizzing over. It goes all the way back to the beginning of 1970s. If this does break, what does this mean? It means that we've got some stagflation to the max coming, much like the 1970s. And that is what the first thing I went over was. Everything is checked for stagflation. We've got these monster patterns in gold and silver that are just lining this thing up. So what do you think I want to have some exposure to? You got that right. Gold and silver and platinum and all these different types of metals. Brendan says, China real estate is collapsing. There's no way copper can sustain higher prices with all this demand destruction. India says, hold my chai, or whatever it's called. Look at the move in Indian copper consumption. It's going vertical. It's going vertical, Goose. That looks pretty good. So here's Tavi, and he's talking about natural gas. He says, history shows that natural gas prices tend to bottom after reaching steep contangos. Here we are again with the second widest spread in the history of this contract. A similar phenomenon occurred with oil in April of 2020 when the market was also oversupplied, marking a historical bottom at ultra negative sentiment. Bottom line is, this is probably not the time to be bearish on nat gas. He's got all these bottoms here, or potential bottoms of natural gas. Well, they are bottoms back here, but potentially where we're at today. And then you look at the futures price curve, 1 year spread, and we're at the second steepest contango in history. And that generally indicates what? A bottom. So we're probably bottoming here in natural gas. I know some people on the website are overly bullish on natural gas, as is myself. And I have added what I think is a worthwhile amount into some of my favorite plays. Here's Battle of the Banks. The tide's turning in Germany's favor. Precious metals and commodities have shown to enjoy this, and really it's the weakness of the DXY or dollar. So this is America versus Germany, bull era for commodities when the dollar is weaker than, so this is Bank of America versus Deutsche Bank. He's comparing two banks, but mainly it's currencies that are driving this, a lot of it. So you get a big move up. This was the recovery phase of real estate. This is when the dollar was strong, and people prefer dollar equities when the dollar is strong. When the dollar is weak, and you can see that we're peaking out here, ready to turn and go lower. And then he also has a below breakdown area, which we're basically below right now. That's the bull era for commodities. And this is just more information and data supporting that bull market that is coming in commodities. And a lot of it deals with currencies and the dollar being weak and money rotating out of dollar assets into other assets in the world. Alan says, why am I not engaging in the value? area of usage is cars. As the recent updates from Porsche, Mercedes, all those different manufacturers have been showing at best slowing down, but also shrinking sold volumes. I'm staying on the sidelines. Anglo American Platinum, with its outlook in February, said that even under current circumstances, with low platinum prices, the market will likely be oversupplied. It will likely take some time to clean this up. So that is an opinion. Someone has basically tagged me on this. My opinion is you buy when people are talking like this. You buy when it's out of favor. You buy when the ratios are cheap. And then you wait. Now, he could very well be right. He could very well be wrong. A lot of what has occurred has been a palladium to platinum shift in the markets. We ran a 1,000,000-ounce deficit last year in platinum. We are still running deficits in palladium. The pricing has fallen below the cost curves of Anglo American Platinum, Sibanye, and also Impala Platinum. All of those, which are the major producers of the world. If they have fallen below the production and they are cutting back production, well, now it becomes what's going to happen first? Supply getting cut back or the demand? I'm in the camp that supply is going to get cut back and prices have to go higher. So buying the physical metal is a very low risk opportunity to play this, in my opinion, if for the patient investor. Confusing the price with the story is the biggest mistake an investor can make, says Peter Lynch, and I agree with that. Confusing the price with the story is the biggest mistake someone can make. And I see it all the time. People are making up stories based off the price action in the short term. That's not what you're supposed to do. CGN, big breakout indeed. And CGN is a mining company, uranium mining company out of China. Big breakout. Investing is the intersection of economics and psychology. Totally agree. The better at psychology, I think, is really where it's at. Charlie says the 30-year mortgage rate in the U.S. moved up to 7.22% this week. Its highest level since last November, 3 years ago. The mortgage rate was below 3%. So we're up at 7.22, pretty high up there. It does kind of almost look like a head, shoulder, head, but we'll see. Or shoulder, head, shoulder. Breaking, Apple stock surges after the company announced a 110 billion share buyback, the largest in history. Apple reported quarterly revenue, 91 billion. Earnings per share, 1.53, both of which were above expectations. However, revenue in Greater China was down 8%. Sales fell 10%. It says we are on track to see over $1 trillion in share buybacks this year for the first time in history. And that's really what stock prices, guys. Share buybacks, like massive share buybacks to push earnings per share higher and the shares price per share higher too. May 2nd says, on May 2nd, Michael said, what if recession was already behind us? The inventory cycle is at its trough. A restocking cycle should begin soon. So the S&P 500, select industry groups, days of sales of inventory, it's way, way, way down there. What if the slowdown is behind us? And this is what makes it really difficult. We've got liquidity coming into the system, fiscal spending through the nose, and people are looking at GDP, but if they understate inflation, GDP is going to be overstated. I think that's exactly what they are doing. Scrolling down, it says, now that the ban of Russian uranium imports is becoming law, is there anything left for bulls to hope for? Or do we just sit around for the next 5 years watching prices rise? On the demand side, almost everything good that could happen has happened. All I see left is Germany and Australia governments finally capitulate and join the pro-nuclear party. Further streamlining of U.S. nuclear plant regulatory process, of more SMR designs. Western countries start announcing new builds of Westinghouse AP1000s. On the supply side, Russia could preemptively halt exports to the US. Otherwise, the feds likely will grant waivers all the way to January 2028. KAP will revise down its 2025 production targets. Other parties' planned announced capacity additions could get pushed further out. That's my full list. Please chime in if you have anything else in mind. Well, this is all sector related. I think a lot of it deals with people owning assets in other sectors that are happy to own them. Uranium takes off along with a lot of the other commodity sectors together when those other asset classes and the investors are unhappy to hold them. That is the main driver of all of these commodity bull markets. And stagflation or high inflation with increasing interest rates is really what bothers people. And that's what got money to rotate in 1970s from tech stocks, bonds into these other assets. Bonds are already rotating. That's good. But they're rotating a lot of it into technology stocks. And that is where we need to see the rotation come from, in my opinion. Uranium would be a great benefactor, and all of the other commodities and energy when that does finally occur. And I do think that the NASDAQ and S&P are rolling over, which is the beginning of a potential slowdown. They're going to lower interest rates and they're going to send inflation to the moon when they do that. That is what's going to be the driver, in my opinion. And we're just waiting for the rates to pull back, the cycle to reset itself, and then the inflation is going to get punched again. They're probably going to do stimulus because the market will slow down if they hold rates high. They're going to have an excuse to lower rates when we get a slowdown. And then when they lower rates eventually, we're going to get some big, huge demand surge in housing, and you're going to see housing rip. You're going to see housing rip, and it's going to rip so bad that people who are anti-housing bulls, the guys who think that we're in this bubble, they're going to turn bullish at some point too, because they're going to be so wrong. That's what I think is coming. And I think uranium is going to be a big benefactor because everyone's going to shift money under those market conditions. Everyone and their mothers is talking about unsustainable U.S. fiscal deficit and debt. Take a look at the off-balance sheet pension entitlements in Southern Europe at 500% of GDP. Combined with the collapsing demographics, it's a severe debt crisis in the making. What's the solution? Question mark. Household pension entitlements. So look at this, guys. Unfunded entitlements. Spain. My God. Italy. France. Portugal. Germany. Belgium. Everything. All over the place here. Well, I guess Switzerland doesn't look too bad. Some of these over here don't look too bad, but these look horrendous. Horrendous debt crisis. Here we go. And here's, we've come full circle in terms of inventories last 10 weeks. A bearish 7.8 million barrels build, wow, of total commercial petroleum stocks. WTI fair value calculated to be $78 in line with current prices is what we've got currently. But that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. If you like, we still have the coupon code MAYDAY going on, MAYDAY. We have a Sunday question and answer session, 5 p.m. Mountain Standard Time. And that's all I've got for today, guys. So we'll catch you later. This is Finding Value.